Thursday, February 20th, market analysis, Stan Ehrlich. Good morning. I always start out with stock indexes, the SPDR, E-mini, of course, and three others, and go to futures and sometimes other topics like cycles or seasonality, which is similar, or psychology of trading, variety of things. So I've been talking about the stock market indexes, and I hesitate to use the phrase topping out. It sounds like I'm a real bearish and it's going to start a bear market or something. No, 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 no. I'm just expecting it to come down significantly, very possibly to the same lows that we saw around October, November, December, those lows for the E-mini and for, in general, the other charts as well, the indexes. And today, we have a fairly sharp down day. All of a sudden, we are now trading well below the highest closing prices for the past 5 days. And we've made lower lows for the past 4 trading days. This looks like the start of what I was talking about. Now, I did not get any bearish engulfings. I did not get any sell signals per se, but all of what I've been talking about, this resistance areas, the overbought conditions are close to it, not necessarily overbought, apply, and here it goes. So I think today's the day it starts. Now, on the 5-minute E-mini, you can see we've blown away yesterday's low, even the day before, and the day before, and the day before. We have bounced off of a little bit of a support area that's not that big a deal. It's not particularly profound. I don't think it's going to hold, but at least it bounced off of it this morning so far. I think it might even be broken yet today. I would not be a damn bit surprised if this market didn't make new lows and get down 7, 8, 9 points lower and even more. This kind of situation can lead to a very sharp, sort of like a breakaway to the downside situation, but a large down day to get the ball rolling, so to speak. And the SPDR. New lows for the 3 previous trading days, did not trade on Monday, and just simply starting to break down well below, the previous historical highs, which were way back on December 6th. So now we're back below that level. We were maintaining for 2 or 3 days here. New highs on a closing basis, looking awfully good, but what was wrong was there was no zip, pop, bang to it. Usually when you see these kinds of upside breakouts yesterday, then it's a very high volume day and really a big up day, and it's pretty obvious what the market's doing, blasting off into new high ground, which we didn't get any of, and other indexes really barely got up to this area, if at all, or I believe one, the NASDAQ maybe. New highs also, but no follow through. So I think this is the beginning of a down move. Next, 5-minute chart, SPDR, basically verifying, just giving you more details than a daily chart. And the daily chart now on the QQQ, again, new lows for the past 3 days, back below previous tops, which it did make new highs in the last couple of days, but didn't keep it. This is way too much of a dip. If you're looking for a normal downside correction to the previous tops and then turn around and go back up again to new highs, that's very bullish. This is not, pretty much the opposite. So now I'm looking for the previous pennant formation to drop back down into, and the bull trend line across the bottom to be broken, and 1 or 2 of these support areas to be reached. I'm not so sure we're going to go down in the QQQ all the way down into the 450, 440, 430 something range, although that is not out of the question. I'm much more likely to talk about 480 to about 475 for the downside objective. Remember, we do have these potential double top formations. Next is the 5-minute chart on the QQQ, and you can see how quickly it dropped off very sharply this morning and is now simply recovering from that, but it's not going up, it's going sideways, and that could lead to another kaboom before the close. Next, we've got the NASDAQ futures daily chart, And it also has made new lows for the previous 4 trading days. It does have a lot of support under the market, granted, all the way to the lows that were made in November, December, basically. And those lows, I think, are going to be tested, and maybe we will see it drop off even more than that. But let's get there in the first place. And we're starting to break down on the 5-minute chart. Okay. Now, the YM Dow Jones is already trading at prices that we haven't closed at since a month ago, January 21. And this is February 20. So we are now below all of the previous closing prices of the last full month. Boom. All we need to do is make it one more round of new lows, and we will be breaking, probably breaking, the lowest lows for the same last full month. So we've reached a little support, but it doesn't look good. It's not holding very well. Let's look at the 5-minute chart. And the YM is very, very close to the new low for the day already, right now. This is a 5-minute data chart. And yep, we pretty much touched it in the last few minutes. Next is the Russell. It is also breaking down. Could be a new low close for approximately a month, similar to the YM. And it is between a gigantic rock and gigantic hard spot. So the red zone is the support area. I fully expect it to come down into that area, as I've been talking about in general. And, you know, probably down to 2198 or something, and maybe now 2172. Now, the 5-minute Russell broke down, came back a little, and is just basically, wait a minute, I'm on the wrong day. It looked the same. Here we go. It looks similar. Broke down, bounced. I think it's about to make new lows again. Okay, we're in bonds. Bonds are up 10 ticks at the moment. I'm looking for a possible 1.5 year long broad double bottom formation. Not the greatest looking one. We're not all that close lately, back in January 15th, to the lows that were made in the fall of 23. So it's over a year, maybe 1.5 years, something like that. And I think that double bottom is going to work. Therefore, we can't go down too much. We could spend some more time going sideways, but that seems a little unlikely. And the sooner it gets up above 17, which we would have a minor upside breakout and reach a minimum upside objective that's still in force from a head and shoulder bottom that has been working just fine so far. That is still expected 17.5. Then we have to overcome, of course, the resistance levels on the way up. So I'm bullish, long term, very bullish, extremely, as a matter of fact. What is my upside objective here? Long term, 146 notes, 10-year notes. Basically, same commentary, trying to break out of this little range it's been having. I hope the support holds again if it's tested. I don't think it's going to get tested again. I think we're ready to start making highs above 10, 110, and then challenge the resistance at 11, 11, 20, 11, 11, 12. That is 111, 12 to from about, 110, 28, and then even higher in the next few weeks, couple of weeks probably. Next, we've got crude oil. Minor new high coming up. What have we got? Very large trading range in a general sense, large pennant formation in a general sense, since a 1.5 years ago, actually, something like that. Actually, close to 2 years, isn't it? Wow. Yeah. Okay. Close to 2 years of it. But lately, since September, the lows have been higher. The highs have started to get higher again. The downside corrections are holding at various reasonable levels that were, for the most part, predictable, and as this one was, but I didn't do much about saying anything about it because it wasn't very well defined. it got oversold. It made a new low. We had no downside follow through, and here we are starting to climb again. So I'm bullish, and I am looking for another move up to probably 80, 82. Next, heating oil, almost a new high for the rally, and therefore coming real close to the highest high since September. I like what I see. It is also breaking out of this pennant formation, breaking above and staying above the bear trend line across the top of the pennant. It hit a minor level of resistance, previous highs a week or two ago, stalling out a little. I think it's still going to go higher. I think we're going to attack the previous highs for the move at 2.5, 25, and maybe break through that. We're not close to being overbought at 68, so there's elbow room to the upside easily. Heating oil, natural gas, plowing through the resistance levels, but this is exactly one of those situations where it pops in a new high ground, rarefied air, couldn't hold it, and is now flip-flopped completely to significantly lower on the day and could have a bearish engulfing if we get below yesterday's low. That would turn it red. That would be an official sell signal. Something like this one back here on November 22nd, and maybe this one back here on October 4th. Some good buy signals lately also. That one didn't work very well. It was only bearish for a couple of days. That one worked a lot better, but they don't always work. But when they do, they are really frequently significant size moves. Now, it didn't work in gold. We got a bearish engulfing at the top of the market. Pardon my cough. Sorry about that. On February 14th, we have now made higher highs, and we're staying fairly firm around the previous tops. Yeah, it could flip-flop again and drop down. Yeah, I could get another bearish engulfing and it would turn red because it's overbought within the last several days, a lot of number of days, and it's a very specific exact number of days. So maybe a bearish engulfing today, but not yet. And it's higher on the day, and it's hanging in there. So I'm not really expecting that. Basically bullish unless I get a sell signal on gold at this point, because it's not showing the weakness I expected. Now, silver challenging the top of the resistance area again and making a minor new high over the last couple of days, but it's back into that resistance area. So as long as it stays in there, I think it stands a real good chance of still rolling over and coming down. Now, I just talked maybe bearish engulfing on gold. We could also have a bearish engulfing on silver. Both of them will fall apart, but they're not at the moment. So I'm gonna, I'm kind of torn between one and the other. So I don't have a strong opinion, frankly, on gold and silver and platinum. You have to stay a little bit bearish. We're not oversold yet. We're coming down already from the same conditions I just described in silver and gold, resistance areas, overbought conditions, and so on. So this has actually led the way down in the last few days, and gold and silver don't want to cooperate yet. Copper. We had a bear signal on the high day right against resistance. Sound familiar? And dropped off for a couple, 3 days very nicely, hit support. And since Tuesday, Wednesday, and today, Thursday, and today is a bullish engulfing, and it is bouncing off support, we stand a chance of having another little rally in the copper market. But that bearish engulfing, I think, has more downside possibilities. It's already worked modestly well. Momentarily, I got to be a little friendly because of the bullish engulfing today. But in the next week or two, I think it's going to be making new lows. Next, soybeans, oil, meal, corn, wheat. Now, here I have to make some adjustments. We've changed to the March futures contracts that we're plotting now. May contracts, sorry. The March are too close. So we're looking at May, beans, oil, meal, corn, wheat. And I got to adjust some of my little circles and stuff like that. That's no big deal. This should be up here. I can do that real quick. And this is the objective that should be up there. the whole chart jumped up a little bit. And this should be probably a little higher, like some, well, actually that was in a good spot already. No, it wasn't. Sorry. Okay. So what am I looking for? New highs. It missed making a new high by a couple of cents back here on February 5th. It simply came back to some support, and now it's apparently starting to weigh its work back up again. This could be a very large long-term bottom in grains in general. It's a double bottom maybe from August through December in soybeans. Let's keep an eye on this intermediate to longer term. I may get some buy signals in the meantime. I like the way it's bouncing off support. I'm friendly momentarily and intermediate to long-term bullish. Okay, soybean oil made a minor new high for the rally yesterday, but in resistance and got overbought. So it's having a little trouble. We have a doji today, no higher highs, no lower low either. Inside trading range today. And I think it's topping out momentarily to have a very minor, small downside dip, much similar to the one it had from the high of January 15th to the low basically on January 23. Yeah, about a week. And maybe it won't even do that. I wouldn't be surprised if it kept on chewing its way north until it got more overbought and then had a correction. We're going to get a major upside breakout if we start to close above 51, let's call it 51. Because I think that's a shoulder back in May of 24, and that's the head of the formation in August of 24. And yep, that's the last shoulder in December of 24. So it's what, a 9 month, something like that, head and shoulder bottom, a good size, fairly large, not huge, but good. Slightly upward slanting neckline, no problem there. I'll move it up a hair. And this would be our breakout, and our minimum upside objective would be approximately 62. And I should move this up over here a ways because it hasn't broken out yet. And then the measurements taken from where it breaks out, yeah, 62 and a few ticks. How about meal? Meal is the one that's lagging behind everything. We're very close to causing a big problem with my long-term bullish story, but it's not doing it. It is holding, and today it's up some, but it has a doji. There's no higher high, lower low. It's just up a little. We do have this possible triple bottom formation. The first lows basically are June of 23. The next major low area was in February last year. And now we have a low that's past tense on December of 24 last year. So this is a very wide triple bottom, long-term major support situation that we are trying to rally out of. And I think it just needs a little more time and it's going to do it. So short-term friendly, but no proof of it starting. Intermediate to longer-term bullish to very bullish. Next, corn has done almost all of these things already. We did have a head and shoulder bottom. First shoulder July 24, the head August 24, and the last shoulder low, a bullish engulfing ER buy signal on the low exactly October 17th to 24. Upside breakout in earnest. There was a little false breakout for a couple of days. Was on 1226, and up we go. Minimum upside objective has been reached a couple of weeks ago on January 23, a month ago. And here we are in the last 2-3 days making new highs for the trend up. I'm still looking for minor resistance at minor resistance areas like 526, but I think it's going to be broken. And I'm really looking now for 566 to 590. Next, wheat. A little dip, got overbought, almost a reversal yesterday, not quite, so no red. Dipping down to support already. Might have a little bit more of a dip. I'm going to say 581-ish. But I'm bullish. We're just eliminating the overbought condition for a day or 3 or 4, and then up again to at least, I think, 634, 640, and even higher. Next, almost a new low in cattle, and our new short sale signal on February 3rd has been working just great here. Now, these signals do occur on tops like that one for about a week or more, bottoms like almost the lowest low on that one, or they're sometimes part of the topping out process, like this one that was premature, and this one, which was a slightly after the fact, which I like better because at least you have something started on the downside. So after the highest high is a little bit more usable, if you ask me, than part of the top. Next is the hogs coming down nicely, quickly, substantially. Looking for a test of this major support area, as I've been saying, 86.9 to maybe 85.5. Looking for more. We're not that close yet to oversold either. And XYZ is the only stock that I've been plotting here for, watching and analyzing for about 3 months now. Major support area, did produce an oversold condition a week or so ago, did have a nice pop up, but unfortunately, we have a bearish engulfing today. That implies that at least these lows would be tested and we might break into new lows, but there are a variety of support areas on the way down. And please don't lose track of the fact that this has broken out of a 2-year bottom formation that really started developing approximately June of 22. And there's June of 23. And there's June of 24. That's 2 years and now a half, 2.5 years. We finally broke out back in November. So, 2.25. So I think support is going to hold someplace and maybe now. And this should, if it doesn't get too much downside pressure from the stock indexes, start to rally. Okay, let's take a last look at the E-mini. We do seem to be bouncing a little. Not really much. I really can't get excited about that. And to be honest with you, something has happened with my data feed. That doesn't look right. Let me go to the spider. Yeah, coming down. And what about the NASDAQ? Coming down a little bit, and it is twitching, so that's good. So we don't have any follow-through rally yet. What about the YM? It did make a new low by a few ticks in the last 10 or 15 minutes. So it's the weakest, heaviest, fastest, quickest to make new lows index for the day. And last peek at the Russell, bouncing like the other ones. I'm sorry, I think I'm looking for new lows before the bell today. You guys have a great day. Tomorrow's TGIF. Profitable trading to you.